please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, this is a show where we'll highlight all the buzzing stocks. We'll pull in a couple of managements and most importantly, we'll tell you how to trade the Nifty. It's a good start for the bulls. We're up nearly around 50 points odd. Things looking good. In the first tick itself, we crossed the 10,800 odd mark. Asian markets as well had given us a bit of a positive start. Hey Mangalam, how are you feeling this morning?
Feeling very good, Nigel, this morning, because we usually keep talking about cricket. There's a chance for the Nifty, the sensex, as well as the Nifty Bank to go ahead and raise their bats. The Nifty Bank has hit a century, the sensex has hit 150 points, and the Nifty, just as we speak, had briefly hit that 50 runs as well. So we'll keep an eye out on individual stocks. First up, all the top stories that we're tracking at this point in time. The Punjab National Bank company looks to pair stake in PNB Housing, ICRA and CRISIL, BSC and BSE. PNB holds 32.96% stake in PNB Housing Finance, valued at over 6,200 crore rupees, while the bank's stake in ICRA is valued at 113 crore rupees. In other news, there were a few blocks on PNB Housing Finance as well.
And Mahanagar Gas hikes CNG prices by 1 rupee 51 paise per kg and PNG prices by 30 paise per SCM. CLSA says the move will narrow the valuation discount of around 30% with IGL.
Atankar and Associates resigns as the statutory auditor of Inox Wind. Management tells CNBC TV18 that this auditor resignation is different from the other exits on the street.
And Sagar Cements holding in the grain after it reported an 80% rise in May production numbers. Their sales too jumped by a whopping 19%.
And Avenue Supermarts, the owner and operator of the supermarket chain D-Mart, crosses 1 lakh crore rupees in terms of market cap.
All right, then how do you trade the Nifty from here? Well, we're up close to around 52 points odd. A lot of stocks are moving around. PC Jeweller, suddenly that stock is up close to around 10%. It's really been moving around in the last few months. And today, it's no different. The stock is up 10%. Just take a look at the intraday chart out there. And you have a Janta Pharma as well from the broader markets. That's doing quite well. That stock did spike up in the last few minutes. Janta Pharma is the stock we're talking about. On the flip side, though, Century Textiles went into the weekend. There was a bit of a jump in the final hour of trade. Now, that stock is giving some part of that away. It's gradually moving to the low point of the day. So keep an eye out on that one as well. How do you trade the Nifty? Ashwani Gujral is with us. Ashwani, 10,820. What's the trade on the Nifty from here? Would you be looking to initiate a long position or have you missed out on that opportunity? Will you sit back and then take a call?
See, it's more of a mid-cap market. Nifty is up, 50 points in a 10,800 index. 50 points does not have the same excitement it had at 6,000. But there are individual stocks and sectors which have picked up. Today, financials are doing well and all kinds of financials, NBFC, rate sensitives. So that way, I think housing finance and a lot of the power NBFCs are also moving higher. In my view, the pharma space has bottomed out. And the reason for that is that incremental bad news is now, for the moment, not making, fresh lows. So this is a time where you buy pharma and see if this is the bottom. Chances are, if nothing, you'll at least get a 25% rally in most of the stocks. So that's the kind of play you want, where there is great amount of safety of shorts and, it's had a large decline. Other than that, NBFC like Bajaj Finance, Bajaj Finserv, again new highs, Jubilant, Titan. So a lot of, very diversified group of stocks is moving up. So that way Nifty may remain stable. It's hanging around, previous day high. So need to make sure that we don't break below 10,800, because if that happens, then the sideways market continues. But for the moment, this dip on Bank Nifty should be bought.
All right, dip on Bank.
Having said that, individual stocks, I think you can buy CAT with a stop around 1365, target of 1410. Oro Pharma is a buy with a stop of 575, target of 600. India Bulls Housing is a buy with a stop of 1195, target of 1240.
All right. Ashwani, 10,800 line in sand on the Nifty as well as the Nifty Bank should be bought right now. You also said that mid-caps are doing well. Mid-cap consumption names are the ones that you spoke about. So it's a Monday morning. Let's talk about suits or sins, because Raymond is at the high point of the day. Along with that, we have Godfrey Phillips and United Spirits, both of them at the high point of the day. Between these three, what would you choose?
Yes, Raymond has had a decline, and from lower levels it's going up. But I am interested in mid-cap pharma, Natco Pharma, Spark. These guys have been bashed up. So the first rally often is ferocious once a sector, the large caps start to bottom out. United Spirits, etc. Anything around 3,000, 3,200 is a good buy. That's probably been running. UBL, again intermediate highs. What you need is where the risk reward is still favorable, because you're hanging around 10,800, 900. It's not exactly the lower end of the range.
Ashwani, a word on Punjab National Bank. The stock has, of course, with all the problems, it's taken a bit of a drubbing, but this month's not been too bad for it. Up around 5-6% in this month itself. In fact, more than 10% as we speak. And it's at the high point of the day right now. Do you think there's a bounce in offing, or maybe stay away?
See, those who think PNB is great value should look at the MTNL chart. Many times it had, 10-15% rally. It was being merged with BSNL, sold to this, sold to that. These guys are value traps. There is a structural problem. The DNA of the employees will not change day after tomorrow. They will again be back to the same story. They won't be lending. Market share is slipping. You buy value where there is no business problem. It's a cyclical issue. Something like Avanti Feeds is again up 7-8%. Right. Or like the pharma space, where things are improving, can improve. Here, there are problems which probably cannot be solved.
All right, MTNL, Ashwani was talking about that. They had land, something being sold. At one point of time, the copper wires were more valuable than the entire company. Have you heard that one?
Of course. I mean, you go to school, college, all these guys in the market, they'll have chatter that, oh, the kind of copper wires that they've laid down is worth much more. And every time they would take the current price of copper, multiply it by the wires that they have and get you some value or the other. But, well, Ashwani, well said, value or value trap. We'll keep an eye out on that. But with that, slip into a short break, come back and we talk about Sanghi Industries. That stock is on our radar. We'll get chatting with Beena Engineer. You're watching Chartbusters, so let's go straight to the management who is sitting by. We have Sanghi Industries. The stock is on our radar to discuss the outlook for cement prices as well as their plans for capacity expansion and volumes in FY19. We have with us Beena Engineer, the director of the company, joining us on the phone line. Thanks a lot, Ms. Engineer, for joining in. Now, there were a lot of reports over the weekend, even some part of last week, that suggested that cement prices in the western part of the country have come down by about 5 to sometimes even 10%. So if you could clarify to us what exactly has been the change in cement price over the recent times, as well as how does it compare by the end of Q4 FY18 to now? How do the prices compare?
Yeah, the cement prices are likely to be under pressure because of the forthcoming monsoon. So that is anticipated and it happens all the year. So there's no news about it as such. Yes, there would be some pressure on the prices in coming months. Monsoon has just begun. While having said that, Sanghi has not had registered any price fall during since May. So we have maintained the price so far in Maharashtra.
All right, ma'am. So you're telling us that from May onwards, Sanghi Industries has not cut any prices, correct?
Correct.
All right. So, ma'am, just we wanted to communicate to you that we here at CNBC TV18, we wanted to check with our dealers, and then we didn't put out any sort of news like that because we wanted a cement company to come and clarify that piece of news to us. So you're saying there's no price cut, particularly in the west of India?
Particularly in Maharashtra and Mumbai.
Maharashtra and other parts of the of the country. Do you have a sense of what is the pricing?
Gujarat, so far there has not been any correction made by Sanghi.
Okay.
Rest of the India, I don't think I would be able to comment.
Okay, all right. Ms. Engineer, if you could clarify to us, Mangalam just had put that question to you. If I'm comparing it with Q4 FY18, then how have the prices moved?
April and May were comparable with Q4 average.
Okay.
June, we anticipate that there would be marginal correction in the prices, which is again seasonal. Also connected to the fact that the non-trade volume will be higher in the monsoon compared to the trade volume.
Okay.
And therefore, that also will have the price impact. So we can't call it a price correction, but because the mix change, the net realization to the company may come down. So June, there could be a small drop in the price realization. May and April were similar to that of Q4.
Could you quantify the cut in June, ma'am? Could it be around 3%, 5%, 7%?
Between 3 to 5%, I would say.
All right, between 3 to 5% is the sort of cut that you expect in June, and April and May, like you said, have been comparable with Q4. So that is something we will keep an eye out on. So let's talk business. The last year you did about 2.9 million tons in terms of volumes. You had given us a guidance of 3.2 to 3.3 million tons in FY19. Do you stick by that guidance, or that can go higher?
We do stick by the guidance. We do anticipate a range of about 3.2, 3.3 during FY19.
And the capacity addition plan, that's on track, right? You had 8.2 million tons in terms of expected capacity or targeted capacity by 2020. Currently, what does it stand at, and is this expansion plan on track?
Yes, the current capacity continues to be 4.1 million, and there will be only one single stroke addition by FY20, which would take it to the double at 8.1 million ton. You are right that it would come by, say, March 20. We have completed about 70% of the order finalization for the project, and we have commenced even groundwork at the plant site. So we are very much on track so far as the project expansion is concerned. And even for the past capex which we have initiated, we have commissioned the West East recovery at the end of Q4.
Okay.
And we have also commissioned all the other projects which we had spoken about earlier.
Right.
So all the past capexes have been completed.
Okay. Ms. Engineer, if you could, telling us March 2020 is when we'll see the capacity of Sangay Industries double. So that's going to be a point that the street will be looking at very closely. What about your funding? You had done a QIP just a few months ago for around 400 crores approximately. You require more funding. Have you already raised loans?
We have raised loans, and we have completed the QIP and equity funding. Some portion may come from the internal accrual.
Okay.
So we believe that all the funds are fully tied up for the project.
Fully tied up. So what is the debt in your books currently?
As of now, we have a gross debt of 700 crores, including about 180 crore of working capital.
Okay.
We have not begun the drawdown because, as I said, the order finalizations is in the process, and our drawdown may begin in July.
And you're borrowing it at what, ma'am? I remember last time you told us about refinancing some of your debt from 15, 16%. It came down to around 11.5% odd. So currently, what is your borrowing rate?
So one good news is that our rating has improved from A minus to A stable.
Okay.
And the borrowing cost has been around 10.5%, 11%. Of course, the recent hike in MCLR by the banks would have an impact, marginal impact.
Okay.
But otherwise, so far as the company's own credit rating and the credit price is concerned, that has come down to about 10.75.
All right. Ma'am, I remember the last time you said that you will save around 3 crore in terms of interest costs per quarter. That comes down to around 12 crores of savings. Last year, you did finance costs of close to 72 crores. I'm not counting the drawdown that you will take or the money that you will be taking for your requirements, but just on the basis of debt that you have right now, do you expect 12 crore rupees worth benefits in terms of finance costs or more than that?
Yes, there will be a drop of about 5% in our interest cost in terms of the pricing. So as you pointed out, from 15.5, we are down to 10.5.
Okay.
So that will clearly have a saving of about 12 crore or so.
Very quickly, ma'am, EBITDA per ton, what was it in the last year? What is it likely to be in this year?
So last year we were about 860 rupees per ton for the year as a whole.
All right.
We should do better than that this year.
Around 900 rupees is the target?
Yes, you can say so. Of course, everything depends on the price and fuel price also.
Okay.
But yes, we should do better than that.
All the best, Ms. Engineer. Thanks so much for stopping by, giving us all those details. So no price cuts, at least as of now. Pricing was stable in April as well as May. Seasonal factors, so expect a cut of around 3 to around 5% going ahead. But volume guidance of around 3.2, 3.3 million tons is something that the management is talking about. Slip into a short break. Come back. We'll continue our focus on the markets as well as on individual stocks. Max Life walked out of the race to acquire the 6,000 crore rupee deal. That's with regard to them acquiring IDBI Federal Life. CNBC TV18 now learns that IDBI and Federal Bank, they failed to respond on critical prerequisites raised by Max Life. And that may even lead to the deal becoming unviable for the sole bidder left in the race. That's Aditya Birla Sun Life. Yash Jain, he's been on top of that. He's joining in with further details. Yash, over to you.
Well, Nigel, let's just first understand where does this IDBI Federal Life deal stand after Friday's development. So yes, Max expressing and announcing that it will be walking out of this IDBI Federal Life deal. It has also informed the exchanges that it will be dropping the plan of raising 5,000 crore rupees via debt, which it had intended to do to support this acquisition really. Now, why has Max Life dropped out of this particular deal? We are given to understand that there were certain prerequisites which were given by the company, and IDBI Bank and Federal Bank failed to respond on those prerequisites, and Max itself had set a timeline internally on whether or not to really participate if it comes within that timeline. It failed to happen, and that's the reason on Friday Max announced that it will be walking out of this particular deal. Now, Max's decision to walk out of this deal leaves Aditya Birla Sun Life Insurance as a sole bidder in this deal. But what we are given to understand, and one needs to remember, is that Aditya Birla Sun Life has also placed similar prerequisites for this particular acquisition of 100% stake. What are these? An exclusive bank assurance tie-up for a period of 10 years, as well as productivity guarantee from that bank assurance tie-up. We are given to understand from the people we've been speaking to, they are saying that it's unlikely that IDBI Bank and Federal Bank would be able to put these prerequisites on paper in the form of an agreement. And if that does not happen, then there is a high possibility that Aditya Birla Sun Life may also not be interested in pursuing this deal further, and it may really face a standstill at this point of time.
All right, Yash, thanks a lot for that. In fact, if you could explain a little further to us and how explain how the India First deal was similar to the IDBI Federal Life deal, and throw more light on the rationale of Max Life's decision to walk out of this deal.
So, Mangalam, I am not suggesting that it was because of the India First Life Insurance deal which really prompted Max's decision to walk out. But if you just look at that particular deal, and that deal happened just about 10 days ago, Warburg Pincus, the private equity player, acquired Legal & General's 26% stake in the company for about 710 crore rupees, which again valued India First Life Insurance at about 2,500 crore rupees. Now, India First Life Insurance is a three-way JV between Bank of Baroda, Andhra Bank, as well as now Warburg Pincus, and it has a bank assurance network of over 8,333 branches together of Bank of Baroda and Andhra Bank. Now, if you look at IDBI Federal deal, where bank assurance again is the most critical part of the deal, 6,000 crore is the valuation which is being put according to the bids which have been placed, and the banks, the network of banks which the two companies get, will be around 3,000 branches. So yes, just compare the two deals, 6,000 crore for about 3,000 branches, and there about 2,500 crore for 8,000 branches. So from any point of view, this particular deal in terms of the assets which they were getting, in terms of the money which they were paying, were little more expensive, and that maybe also is a thought to ponder upon.
All right, thanks so much for that, Yash. Well, getting back to the markets, and in fact, we're talking about Avenue Supermarts. Remember, today, in fact, the market capitalization is more than 1 lakh crore rupees. So let's pull up that chart for you. Remember, in fact, you know, it's had a dream run. Just in March 2017, Avenue Supermarts, that's D-Mart, listed on the exchanges. Those that applied for the retail and for you know, the IPO, right, and retailers that were lucky, they got around 50 shares. They said, I got 50 shares around 299 rupees. On the day of listing itself, they almost doubled their money. Some of them would have got out at that point of time. But you know, this stock, in fact, you know, when they got 50 shares, what would have been debited from their account? Around 15,000 rupees. Right. Today, those same 50 shares, Mangalam, are worth 65,000 rupees. And in fact, it's already been a 4-bagger plus from the IPO. Imagine that, Mangalam. Wow.
Absolutely. Wow. You know, Nigel, you spoke about how retailers said that they were lucky to have got the allocation in the IPO, even if they did not get it. And they the stock opened at 600 rupees.
Still,
if they bought it at 600 rupees, they would have paid about 30,000 rupees. Yes. And that would have been worth 66,000 rupees. Wow. So it's doubled from even there. So what a dream run. 1 lakh crores, that's only 29 of BSE listed stocks that have 1 lakh crore in terms of market cap. Remember, sometime last month, the promoter sold 1% stake in the company. some people said that that may have been a good opportunity for some to buy. Well, had you bought on that day, 1350 was the low, you would have still been making 20% in just less than a month. But with the price, one needs to know what the value is that they're paying. Their FY18 EPS was close to 13 rupees. Consensus is expecting 22 rupees in terms of EPS for FY20. So that's nearly doubling of the EPS in the next 2 years. So keeping that in mind, the stock trades at 73 times FY20 price to earnings. Well, you're paying 73 times for 54% CAGR in the past. So we need to know whether this growth continues or not, because the revenues over the last 6 years, along with the net profit and EBITDA, have grown in excess of 40%, 54% EPS growth. That's what you're paying for. Growth of high base, scalability of their e-commerce business, and the next round of promoter stake sale is something that I will be watching out for. But as of now, the street is doffing its hat to DMart.
All right. Thanks so much for that, Mangala. Well, on that note, we'll wrap up on Chartbusters. You stay with us because Trading Hour comes up next.